right, Matt Orton is now with us, Chief Market Strategist at Raymond James Investment. Matt, good to have you with us here. Good morning. What do you think? Is it, or do we just don't know? As someone put it well last week, whatever comes on the 2nd of April, for India specifically, the hit is not direct because we're not a big trading partner with the US, one way or the other. The hit is indirect, which is not less painful or anything because of global growth. But let's just start with at the beginning. I mean, what is your sense? Is it going to be a big one? Is it going to be phased in?
Hey, good morning, Prashant. Always great to join. And I think we might still have a surprise on April 2nd. I've been telling clients while my long-term thesis with respect to growth and overall markets still remains fairly optimistic, I'm cautioning against leaning into the rallies that we're seeing globally, particularly if we see more of a relief rally in the US, simply because there's a lot that we still don't know. There's been so many starts and stops with respect to tariffs, it's really hard to believe a lot of the headlines that we're hearing from the administration. And I actually think that rather than reciprocal tariffs, which are very painstaking and difficult to put into place and are going to require more time, I think April 2nd is really going to be more about penalizing tariff villains or perceived tariff villains around the rest of the world. So I think India might be in store for perhaps some tariffs that get put in place. But to your point, I don't think it greatly will impact the Indian market. And so for me, what's a really important cue to look for is, can Indian markets continue to push higher in light of some tariff volatility? Whenever markets that are rebounding, if you can rebound through bad news, that to me is a very good confirmation that a bull market is starting to form again. So that's what I'm going to be paying attention to on April 2nd.
Okay, fair point, Matt. And we've seen some signs of that, right? Even when the US market was faltering, India managed to hold on pretty okay in the last 2 weeks or so. So, if you are willing to put some more money to work here in India, and let's say if there's no major disappointment in April 2, then what would you buy in this market?
Yeah, Surabhi, we've talked about a lot of the companies that I favor that I still really like. Higher quality investments that I've been leaning into, like ICICI Bank. I know this is one we talk about quite a lot, but it is, I think, one of the highest quality Indian assets. It's been able to see through some of the challenges with respect to loan growth. Its private banking business, I think, also provides a very good diversifier. So this is one, if you don't own, it's had a really big rally. So maybe look for a little bit of a pullback to add some exposure. But another bank that I have my eye on is HDFC. I've always liked their asset manager, but the bank itself, I think the market is a little bit too pessimistic on their ability to push through margin expansion. And again, I think the Indian consumer is in good shape, and especially with growth on the rebound, I think their ability to grow loans is underappreciated by the market. So I'd look into that. And another pullback I'd look for is Interglobe. This is a name I'm a little bit upset that I've missed. It's one that I've been looking at for a while, just given the operational efficiency of the management team, but their ability and their growth plans to hit 600 new aircraft by 2030, that's still well on target. Their ability to manage costs through large-scale orders, that is well in place. So that's another name that I view as high quality and leans into the idea that people are traveling more, the consumer's doing well, and as growth rebounds in India, I think this is one to look at on pullbacks.
All right. Hi, Matt. Morning. Always good to hear your thoughts. So what's the view on global equities, though? The US markets have seen some profit taking from the top. The European market has done very, very well. So in terms of developed markets, what do you like? And from the emerging market basket, you have liked, I think, LATAM, select parts of LATAM. China has done quite well as well. And India has underperformed. So when does India feature in the emerging market pecking order? Developed markets and emerging market. Go ahead, Matt.
Yeah, so I'll start first with developed markets, Nigel, because I think what I'm looking for is perhaps a little bit of a rebalance. Europe, I think, has outperformed significantly, and rightfully so, given that things have gone from really, really bad to perhaps looking better. And I think the fiscal stimulus you're seeing out of Germany has been necessary for so long, but it's not the only thing that matters. Europe still needs a weaker dollar. Europe still needs to find a way to better coordinate financing and giving money to businesses to actually form. So right now, I like global banks. I think leaning into banks in Europe and around the rest of the world makes sense. I think looking for pullbacks in European defense companies, that makes sense. And Japan, honestly, has been forgotten in the developed market perspective, but Japanese markets actually have the strongest earnings acceleration. And that to me is very, very important looking forward. So Japan, I think, looks very interesting from a global market perspective. On the emerging market side, India is finally bouncing. Like I said before, if we get confirmation and this rally continues past April 2nd, I think we're going to see a lot stronger gains going forward. So it's definitely one to keep on your radar. Latin America has done well. I think there's been some reforms put in place. I want to see again how April 2nd plays out, especially for markets like Brazil that do trade quite a bit with China, what that impact could be. But what I like about Latin America is that they do produce a lot of food. And in light of tariffs, their demand across the rest of the world, if there are tariffs or difficulties trading U.S. agriculture, they're going to benefit the most. So that's another region that I think can continue to perform well, especially commodities and agriculture, is they'll be the supplier to the rest of the world, maybe if the U.S. loses a little bit in the short term with respect to tariffs. But markets overall, I think, are in a good place. Don't chase, wait to be opportunistic, and hopefully in a few weeks we're going to see stability and maybe a little bit less volatility, which should help sentiment rebound.
All right, Matt, thank you very much. Always a good conversation, and appreciate your time here on CNBC TV 18. Well, let's